Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello, hello, hello. My name is Roshonda, agency owner of the Isom Insurance Group, right here in the Sunshine State of Florida, with a brand new Quick Bite episode, your fast and informative insurance industry update. Today is Friday. It's Friday. It's Friday. It's Friday. It's Friday. October the 17th, 2025, and it's what we call Free Friday, the day we answer your real questions from the week. And this one comes up constantly from parents, grandparents, and even the 19-year-olds calling me themselves. My child is now over 18. Should they stay on my auto insurance policy or get their own? It's a great question, and like most things in insurance, the answer is it depends. But don't worry, we're going to break it down so you'll know exactly when it makes sense to keep them on your policy and when it's time for them to launch into the grown-up insurance world. First, let's talk about why this question even matters. Turning 18 is a legal milestone. They're now an adult. But from an auto insurance perspective, age isn't the only factor. The real question is, where do they live? Who owns the car? And how is it used? Here's the golden rule most carriers follow. If your child lives in your household and drives a car you own or insure, they typically need to stay on your policy, even if they're 19, 21, or 24. Why? Because auto insurance follows the car, not the driver. If your name is on the title and your policy, anyone in your household who has regular access to that vehicle should be listed. But if your child moves out, buys their own car, and has their own address, that's when it's time for them to get their own policy. Let's start with the benefits of keeping them on your policy. It's usually cheaper. Adding a young driver to an existing family policy is almost always less expensive than them starting fresh. A standalone policy for an 18 or 19-year-old can cost $3,000 to $5,000 per year. But on a family policy, that might drop closer to $1,800 to $2,800 a year. They benefit from your coverage. They're protected under the same limits and endorsements you have, which is often stronger than what they could afford on their own. It's easier to manage. One bill, one renewal date, one agent. Hi, that's me. And fewer headaches. But there also is a downside. It raises your premium. Teens and young adults are still considered high risk drivers. Adding them can increase your rate by 50% or more, depending on their driving history. Their accidents affect you. If your 19-year-old has a fender bender, it hits your claims history, not just theirs. They may eventually outgrow your coverage. Once they're independent, keeping them on your policy might limit their ability to build their own insurance history, which can affect their future rates. That's a big one. The sooner they're on their own policy, they're able to start building their own insurance history. That means their longevity of having a policy on their own, paying it on time, not having any accidents or tickets. It helps them in the future with their future rating. Now let's flip the script. Flip it up, rub it down. Oh no. When does it make more sense for them to go out on their own? Here are three big signs. They own their own car. If the vehicle is titled in their name, most carriers will require them to have their own policy. Insurance has to match ownership. They have their own address. If they moved out, maybe to college, a new apartment, or their own home and no longer live with you full time, it's usually time for a separate policy. They're financially independent. If they're paying their own bills and want to start building their own insurance history, a solo policy helps establish that, which can pay which can pay off down the road. Here's a real world example. Kylie is 19, lives at home, drives a car owned by her mom, and goes to community college nearby. She should stay on her mom's policy. It's cheaper and simpler. Another example, Darius is 20, moved out of the house, bought his own used car, works full time. He needs his own policy. If he stays on his parents' policy and gets into a crash, the insurer might deny coverage because he's no longer a household member. And just one other piece of advice. If you're a parent that has like some assets that you're trying to protect, it may be a good idea to when that child turns 18 to get that car titled in their name and get them their own policy. Why? Because if they get in an accident, the lawyer's going to go after them and their assets, and it's not going to attach potentially to your assets. So it helps to protect your assets more. So just something to consider. Now let's talk about one of the most confusing scenarios, college. If your child goes off to college but still lives with you part of the year, for example, they're home for holidays and summers, most carriers still consider them to be a part of your household. That means they can usually stay on your policy, especially if the vehicle stays at your home. However, if they take the car with them to another state or start living full time away from home, you'll need to notify your insurance company. The policy might need to be updated with a new address, or they may need their own policy if they're considered fully independent. Pro tip, some carriers even offer student away at school discounts if the car stays with you and your student drives it only occasionally. It's worth asking about. Here's something most parents don't think about. Insurance history matters. When your child eventually gets their own policy, insurers look at how long they've been insured. If they were on your policy for years, that counts towards their insurance history and it can help them qualify for better rates later. If they've never been on a policy before and apply for their first one at age 22, they're treated like a brand new driver, and premiums will reflect that. So even if they're not driving much, keeping them listed on your policy while they're still dependent can help set them up for lower rates in the future. Here's how I break it down for clients. Still living at home, driving your car, keep them on your policy. Moved out, owns their own car, time for their own policy. College student living away part time, usually stays on your policy, but check with and we would need to check with the insurance company and the carrier depending on what their rules are. Paying their own bills and fully independent, solo policy makes more sense. And one final thought, communication is everything. Tell your agent when your child moves out, buys a car, or has a major life change. These little details can make the difference between having coverage and not. And remember, us as the insurance agents, we're here to advise you. We work for you. We're that bridge between you and the insurance company. So don't be afraid to tell us because that's how we're able to work through and find the best company that can fit your specific needs. If you don't tell us, we don't know and we're not able to advise you. Here's the big takeaway. There's no one size fits all rule. When it comes to insuring kids over 18, it all depends on where they live, who owns the car, and how's it used. The good news, with the right setup, you can save money, protect your family, and set your child up for success. Now, I'll love to hear from you. If you found today's quick bite helpful, please like this video, share it with your friends and neighbors, and drop a comment below with any topics you'd like for me to cover in the future. And remember, a new Quick Bite episode drops every Monday through Friday at 2 p.m. Eastern. This video is for informational purposes only, or educational purposes only. It should not be taken as legal, tax, or specific insurance advice. Please consult with a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. And I will see you next time. Enjoy your weekend and stay safe out there. Bye.
Thank you for watching. Visit us at isomInsuranceGroup.com.